Hey everyone, Couch Investor back on our earnings video for today. So, Nvidia, the big guy, the big one, has reported yet another outstanding, flawless quarter. Even my expectations were high, but they keep doing what nobody else has been doing for quite a while. But there is something I found in the report that could be very interesting. Shouldn't really hurt the stock that much though, but it is an interesting thing to take away from all that report, despite all the incredible news, especially going into next quarter and going into 2024. Now, they are already in fiscal year 2024, calendar year 2024. Now, looking at the stock valuation right now, which is very interesting because year to date, the stock is up 240%. Market cap $1.23 trillion with a forward PE of 32.6 times. So despite being up 241% year to date, the stock is cheaper today than it was at the start of the year when looking at forward PE, EV to EBITDA in the next 12 months, price to sales in the next 12 months, and price to free cash flow in the last 12 months. All of those metrics today are cheaper than the mean throughout the year, and even some metrics are cheaper today than it was at the start of the year. Now, that said, it is definitely not cheap. Especially if you look at price to sales, next 12 months, 17 times. Now, even if we expand it a bit for the last 5 years, so even before the business got that huge push, forward PE is still lower than its 5-year mean. Same for EV to EBITDA, but price to sales is one that is higher, but still 5-year mean for the price to sales ratio was still very high, 15.4 times. So yes, you could say that Nvidia over the past couple of years has never really been very cheap. It was cheap-ish back in October at around, $115, $120 or so, after it crashed quite a lot. But since then, since the release of ChatGPT, that stock has just gone up and up and up like there's no tomorrow. And so let's start with a couple of comments here from the CEO, Jensen Huang. Our strong growth reflects the broad industry platform transition from general purpose to accelerated computing and generative AI. LLM startups, consumer internet companies, and global cloud service providers were the first movers, and the next waves are starting to build. Basically saying we just got a little preview right now, there's more to come. Says Nvidia's GPUs, CPUs, networking, AI foundry services, and Nvidia AI enterprise software are all growth engines in full throttle. The era of generative AI is taking off. And when you're going to see the numbers in just a second, you'll see that he's not lying. Now, if you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, would really appreciate that. We are going to cover the local, probably the video will come out tomorrow before the market opens. If you want to support me even further, do check out the link down in the description and the pinned comment to get the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. So, if we have a look here at the gap performance, so revenue is up 34% quarter over quarter, 206% year over year. Gross margin at 74% right now. That's up 3.9 percentage points quarter over quarter and 20.4 percentage points year over year. As for operating expenses, revenue has increased quite a lot. Operating expenses up 16% year over year and only 12% quarter over quarter. As for net income, that's up 49% quarter over quarter and 1,259% year over year. Operating income, a bit of the same story. And so diluted earnings per share, that's just nuts. Year over year, it's also up 12x. And quarter over quarter, it's up 50%. Imagine, profitability-wise, you're up 50% quarter over quarter. It's just insane. This is on a GAAP basis, by the way. Then if we go and have a look at the revenue per market platform, so data center increased 41% quarter over quarter. It already had a huge jump the quarter before. Year over year, that's up 279%. Gaming is up 15% quarter over quarter, 81% year over year. Professional visualization, that's up 10% quarter over quarter and 108% year over year. As for automotive, still a laggard, let's call it. That's just up 3% quarter over quarter and 4% year over year. So totally, revenue came in at $18.12 billion, up 34% quarter over quarter and 206% year over year. But if we scroll down, we have here a little comment on the licensing, the requirements for exports in China and other country groups, D1, D4, and D5. So they say here, these licensing requirements did not have a meaningful impact on our revenue in the third quarter of fiscal 2024, as they were announced near the end of the fiscal quarter, and we had additional demand from customers outside of the named country groups. Our sales to China and other affected destinations derived from products that are now subject to licensing requirements have consistently contributed approximately 20 to 25% of data center revenue over the past few quarters. We expect that our sales to these destinations will decline significantly in the fourth quarter of fiscal 2024, though we believe the decline will be more than offset by strong growth in other regions. Now, this is important because what happens the quarters after that? Are other regions enough to offset the decline here or not? This is basically one of the only negative things that I could have found in that report. That's just something to take into consideration. I mean, for next quarter, we're pretty safe. You're going to see their outlook for that quarter, still quite some growth. Now, with regards to automotive revenue, so they say here that the sequential increase was driven by sales of self-driving platform, but of course, it's just 3% sequentially. Then, if we go even further down, we look at the balance sheet and cash flow. So again, here you can really see what type of cash flow machine this has become. So cash equivalents, and marketable securities were $18.28 billion, up from $13.14 billion a year ago and $16 billion a quarter ago, basically adding just over $2 billion quarter after quarter. And then inventory, that was $4.78 billion with days of inventory of 92. Last quarter, that was inventory of $4.32 billion and days of inventory of 97. So again, some nice little improvements here. Cash flow from operating activities was $7.33 billion, up from $392 million year over year. I mean, the difference between Nvidia this year and Nvidia last year is just night and day. And the difference between Nvidia this quarter and last quarter, this quarter again, $7.33 billion, last quarter, $6.35 billion. Then as for the outlook, so revenue is expected to be $20 billion plus minus 2%. I mean, that's still an increase of around 10.4% or so quarter over quarter. So yes, sequentially, we are seeing a deceleration of growth. I mean, this quarter we grew 34% quarter over quarter or so. Next quarter, we're only going to grow 10%. But of course, year over year, that growth is still quite big, which we can see the quarterly revenue trend as always on this slide right here. So this quarter, $18.12 billion, quarter before $13.5, Q1 $7.1, and then Q4, which we could compare year over year next quarter, was just $6 billion. So I mean, the year-over-year comparisons will be, again, very, very nice. You go from $6 billion to $20 billion in 1 year time. But like I said, you're not going to get those huge jumps anymore. In my opinion, those 30%, 40, 50% jumps or even more quarter over quarter. I don't think we're going to see that anymore. Next year, of course, the comparisons year over year would be much more difficult for the company unless they have another rabbit that they can pull out of their hats. But just keep that in mind. And of course, with the restrictions, of course, things can change. Those rules can change. Might be more licensing rules or less. Who knows? Then with regards to the graph, we have reached actually all-time highs last week a bit at $505 or so. So we're now back at the same spot we were back in August 2023. Got a big rejection there. Let's see what happens. If this becomes a double top, that is usually bearish. So look out for the other moving averages. We got the 20 at 470, the 50 at 455, and then the 200 all the way back down here, 382. I don't really think we're going to see those prices, but hey, who knows? We were very close to being overbought. We're still pretty high on the RSI here. So yeah, I mean, if the market becomes red in the coming days, then of course that could pull down a high flying stock like Nvidia. But overall, I keep saying the same thing. If you hold Nvidia in your portfolio, you really have zero reasons to sell. If you're looking to add to Nvidia or open a position, of course, always look for better entry points. So that will be it for this video. Of course, do share your thoughts on this earnings report, what you think about Nvidia going forward. The investment opportunity here, has the risk reward become a bit trickier? Let me know down in the comments below. As always, if you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and I see you all in the next one. Bye bye.